Hey everybody, welcome back to the 5-Minute Trader. I just wanted to again drop one video this week before returning later next week. Again, I'm still taking some time off and slowly getting myself back into markets. So crude, I wanted to bring up a chart, a long-term chart. These are monthly bars that we are looking at. And crude right now is closed today at $60.37 a barrel. A couple things that have shown themselves to me here over time is that until we have a monthly close over $62.58, we really can't start to talk about making a run for, say, $100 again, which a lot of gold, or rather oil bulls have been discussing. Now, a couple things that are showing up here on the chart to me is $60.37 is where we're trading. You'll notice that there's this level right here, 62.58. Actually, we saw about 65. Was an area that we first kind of took a pause and really took that last final step and took off from back in 2007. And if you weren't involved with markets at that point, which was a decade ago, I can tell you these were pretty exciting times, pretty heady times for the traders that are involved in crude. And you can see why. We went from, in a matter of a decade, we went from $10 a barrel all the way up to 110, 100, and then all the way, again, all the way up to 100, just shy of 150. From there, we broke, tested, and failed again, made another new low. So when you, again, look at time framing and where we are, although this is a 35-year chart, we really are in a longer-term downtrend, and it's pretty simple to see. We've made a high, and we've made multiple lower highs, and we've made now multiple lower lows each time. I'm not suggesting that the timing on this means that we'll go lower, but until we close over 62.58 on a month end, and that means we have 12 months coming in this year. You need to look at January 31st, February 28th, March 31st, etc. And our first quarter doesn't close until the 31st of March in about 90 days. So what you're looking at now is a situation where you've had a huge move in crude. And the thing that I want to bring up again here, we talked about this in an earlier video, but this is a chart that I use on bar charts, and I like it because it can show me the price action for multiple years along with the commitment of traders attached to it, and I really like looking at this chart. So here's the last 3 years. The last high we saw was that I mentioned here was 62.58, and that was seen, and this is the continuous contract. This was seen the first week of May, and so it would make sense that we need to go back and test that, because after messing around here for 8 weeks after making that high, we had a very high commitment of traders at that point. Matter of fact, you can see that here. I think we got up to, we were at around 320, 347, maybe about 360,000 on the spec side then were long. Today, we sit at an all-time high of 632,000 large speculators, which are people that trade these markets for direction. All right, so that's the most important number for me, directional traders. When they're so one-sided as they are right now, and we've had, on top of that, a huge move from 42 up to nearly 61, which is about a 50% move now in the last 6 months, I find it very difficult to pretend that this can be maintained. So without more rocket fuel to add to this situation again, I think you're running into a situation where unless they can close over 62.58 at the end of January, February, or March, any of those, and the best situation would be a March close over 62.58 in 90 days. So that's not anything that you and I can predict or project. It's just something we need to watch. Until you can do that, you're most likely going to probably see a high here in the first 3 months of the year, I would suspect, in crude, and probably make a run back to at least 50, if not 40. So Here's a 5-year chart just to give you some clarity on that. So why this number is so important and why people are getting so excited about crude is that they're projecting that we're going to get over this level. But keep in mind, this took 2 months. This little piece here that I'm showing you was a very high commitment of traders, and it took 2 months to wear off. And when it did, oil then fell from 60 all the way down to below 40. All right, so, and then it continued and went to $25. So that was the end of the downward move. And I would say that keep an eye on this. And as we come back to the chart on crude here, this again is a monthly view. Now, if I just take it back to an hourly view, looking at the last 20 days or so, again, you will start to see that just over the last 20 days, we've had a huge move. We double bottomed. We had a low here, and then we moved from this 56 level all the way up to just about where we are at 61. Balance continues to be back here at 57.72. There's a huge hole below 59. If we get below 59, we're going to move very quickly to 58. And there's a few other holes if you start looking at daily charts that I wanted to point out also as we're beginning the new year. But you can see this pretty clearly that there's a big hole right here, really from below 56 all the way to 54. So you can see some really quick moves just to shake out some people right to this level, and then maybe bounce and test that whole 60 to 63 area again. But this is how you really need to view these markets and who's in control of the long term, the big term money. So that's it. Happy New Year to everybody. We'll be back again next week, probably most likely Tuesday, Wednesday, the 9th or the 10th, full bore for the 5-minute trader. And we just hope you have a great day today. Today is January 2nd, post-market 2018. And congratulations on making it another year.